Hey guys, it's Bronson. I want to talk with you today about how to effectively reduce your taxes to zero. You may be thinking, you're crazy. How could you pay no taxes? Or how could this potentially work? Well, I'm telling you, not only is it possible, it's legal. The government actually incentivizes you to be able to take tax breaks and to be able to potentially reduce your taxes to zero. Now, how do I know this? I know this because I've done this, I've had friends that have done this, and it's something that I've seen people do. Everybody's situation, of course, is different, but just because you haven't seen it doesn't mean that it's real, right? It said you can't see the wind, but you can see the effects of the wind. And so it's important that when you see something you don't understand, it's important that you take a closer look. And we're gonna get into this in 3 easy steps. I've also got a great quote for you at the end I think you're really gonna like. All right, so this is step number 1. Learn about your options. Again, you may be thinking, this just feels really far-fetched. How can somebody in our tax system, with how complex it is, pay no taxes? Before I get into that, I wanted to give a quick disclaimer and say, I am not your CPA, your tax person, your financial advisor, any of that. I'm not even a tax advisor or a CPA or any of these things. This is simply for educational purposes only, and I just want to make that clear before we get into this. So let me first of all say that the government gives people incentives within the tax code to pay less or no tax. Now, why would the government do that? Well, the reason why is because they want to subsidize. They want to find ways to subsidize things like workforce housing or energy. And they will do that so that they don't have to provide those services themselves. And so they provide certain services there to be able to reduce people's taxes, and there are ways this can be done against ordinary income. It can be done against, if you have a business, it can be done with all different types of ways. Now, it's important that as we get started into this conversation, that we look over here. This is the cash flow quadrant. So if you know Robert Kiyosaki's, basically a second book he wrote right after Rich Dad, Poor Dad, it's called Cash Flow Quadrant. So this is the cash flow quadrant right here, okay? So you've got an employee, you've got a self-employed, you've got a business owner, and you've got an investor. And I want you to think about your situation, about where do you fit on there? Are you an investor? Do you have a business? Are you self-employed, like somebody like a doctor or maybe a lawyer? Are you employed? Do you work for a larger company or a smaller company? So if you're on the left side of this equation, you're basically going to typically pay around 30 to 60% in taxes. Ouch, right? And Tom Wheelwright, who's a tax expert with Rich Dad, he always says, if you want to change your tax, you've got to change your facts. So it doesn't mean you have to stay on one side of the quadrant, you just have to change where you are. Now, I moved from this side of the quadrant to this side of the quadrant. It took a lot of work, a lot of time. I know a lot of you are investors as well, so maybe you have a job or you're self-employed and you are an investor as well. And so you have different aspects that you can do where you pay less in taxes. On this side, typically business owners, we usually pay around 20% in taxes. It can be less or more or less, but that's typically about what it is. And then if you're an investor, a lot of investors pay 0 in taxes or close to 0. So again, this is something to be aware of, that as you go, if you're a well-paid employee, it's hard to get to where you pay no taxes. It still is possible. There are ways to do that. We're going to get into that in step number 2. So stick around, and I think you're really going to like that. So as we kind of go through this, I want to go through this kind of loophole that I talk a fair amount about. This is one that I have used, and a lot of people, my friends that do real estate, they've been able to use this as well. So the IRS has a designation called the Real Estate Professional designation. That's just, if you search IRS Real Estate Professional, you'll be able to see exactly what that means. You have to do a certain number of hours per year. It's got to be the majority of what you do as far as work. You can have other things that you do, but what it allows you to do, it allows you to take your ordinary income and basically reduce it by any sort of passive losses that you have in real estate. Now, people that are normal employees, they can't do this. But if you are a real estate professional, you can. And how you do it, and how a lot of us do this, whether you are a real estate professional or not, is through something called cost segregation, or a cost segregation study. This is a fancy way to say that they allow you through the tax code and through some using an engineering firm on a multifamily property investment. So again, this is the type of investments that we do. People invest, and then you're able to use a lot of the money that was invested in year 1. You're able to take all the depreciation that's typically used over 10 to 30 years, you can use it in year 1. Now the downside, I mean, right, that's incredible, right? I mean, that's amazing that you can do that. The downside and the catch is that you have to recapture when you sell the property. So let's say you sell it 5 years later, it's prorated, and whatever you didn't use from those prior years of depreciation, you actually have to kind of catch up or pay back. But effectively, it allows you to defer, and if you keep doing more deals and bigger deals, you continually just kind of kick this can further and further down the road. So for example, 100K in income, let's say somebody's got 100K in income from their job as a real estate professional, they're able to depreciate $100,000, basically effectively gets them to zero, which is amazing. I've done this, I've had other friends, a lot of people that I know have done this and continue to do it. It's really, really amazing. It really makes real estate another way that I call it an unfair asset class, because again, the government incentivizes it. Another way is through trusts. This is one way to do it. Another way is through trusts. So what you can do is basically every time you have a business deal, a real estate deal, you close on something new, you can basically set up a way to put it into a trust. And so basically it just defers, or it pushes everything out further to where you don't have to pay taxes. Now, I'm not a legal person to kind of be able to fully explain how this works. I just know people that have done it. I know a guy that's done it, has about over $9 million in the trust. Now the trust, he is not directly considered the owner, but he's the one who has control. So again, the goal for some people is to own nothing but control everything, right? Because then people come after you, they can't come after anything because you don't own anything, but you control these different sorts of assets. So these are some ways that people, some of the options, ways people get to zero. I'm actually going to talk about how do you do this more specifically in your job or in your business, particularly if you're part of the E or S quadrant. That's going to be step 2. All right, so this is step number 2, how to pay zero taxes in your job or in your business. Sounds pretty great, right? We're going to jump into it. And first thing you can do if you have a business, or even if you have a job, there are write-offs that you can take. Maybe you can write off your home office. Maybe you can write off your car. Maybe, especially with a business, any sort of business-related expense, there are so many things you can write off. Any sort of travel related to your business. I'm not going to go into detail, but there's a lot. So work with your CPA in that and find ways you can reduce your basis there, even what sort of maybe things that are personal that you can kind of roll over into business and things like that. So something to really consider, write-offs. But really the tough one that's hard to solve, right? And I would say it's hard to solve is if you have a job, you are an employee, how do you solve this Rubik's Cube, right? I was never good at the Rubik's Cube. I don't know, maybe you're good at the Rubik's Cube. My brother and I, we would actually take the Rubik's Cube stickers off and we'd put them on the correct place where we wanted them because we felt it was so hard to be able to solve it. And sometimes when looking at reducing taxes, it can kind of feel like that. It just feels like, there's really no way to get out of this, right? Like death and taxes, that's kind of what everybody is subject to. But what I wanted to say is that there are ways to creatively go at this problem and look at it differently. There is a way to solve that puzzle. So the biggest thing that a lot of people don't know about is particularly in the energy sector, the government has provided all sorts of incentives to where you actually can have a reduction of your income based on investing in certain things. Now, one example of this, if you invest in oil and gas. So if people do drilling for oil and gas, it can be hit or miss, but if you invest, it's typically 80% of the amount invested typically can be reduced from your income, which is pretty amazing, right? Now, it's even better if you hit oil and you make a ton of money on it, but this can be risky. And most of the time, people drill for oil, they will not find it. So there is a fair amount of risk associated with oil and gas. Another one, this is a unique one around energy. And again, when I say around energy, there's a lot of stuff around the energy space that you have to research and find out. And this is one that I uncovered. It's called carbon capture. Now, how carbon capture works is when they go in and they get oil, they go in and they get natural gas out of these wells, they have to basically strip or capture the CO2 from this. And so these oil companies or these gas companies pay to have this service come in, and they basically go and capture the carbon, and the carbon is later sold. So they get paid to capture this from the oil and gas place that needs this service done, and they also get paid to sell the CO2. So kind of getting paid on both ways. So I know of somebody who does this investment, and typically it allows for 100+% of the amount invested that can be reduced. So meaning if somebody invests 100K, it's over 100K that actually can be reduced against ordinary income. Now that's really magical. We're not just talking real estate against real estate stuff. This can actually be reduced against ordinary income, which is really phenomenal. And not only are you getting that, but you get a pretty steady return. Let's just say, I don't know exactly what it is, but for example, again, this is not, I'm not offering, I don't sell this investment. I'm not, trying to get anybody into this investment, but just to illustrate a point, let's say it's 15% IRR or internal rate of return. So what that means is if this is the amount of return, not only are you getting the return, but you're also reducing your income on this other side over here. So let's say you make $200,000 a year, you put $200,000 into something like this, you're getting this type of return. Not only are you making a really good return, my math is correct, around $30,000 per year, but you're also reducing the taxes you would have paid on the $200,000 that you made. So it brings this number much, much higher. It could be a 30+% return when you consider the tax advantages as well. And this is where this stuff gets really, really fun, because what happens is you're able to find creative solutions to a problem that you did not think possible, right? Instead of just trying to pull the stickers off the Rubik's Cube, you're actually able to find a way to solve the Rubik's Cube and actually make it work. And you're like, wow, I did that. I figured that out. So this comes through research. This comes through finding out things around energy. I'm going to get into that in a second. There are other energies as well, ways you can get into it, but the goal really is zero net taxes. So I believe it is possible as an employee, it's possible as an entrepreneur, it's possible as an investor. And so third step in all this is who can help? Because again, this is not something you can always figure out on your own. I would say there are tax strategy firms that actually specialize in this. They do cost money, but they will put you in touch with certain types of investments that can help do this kind of stuff. There's also alternative investment consultants. A lot of these I was just at a great conference called the New Orleans Investment Conference. Talked a lot about alternative energies and mining and all kinds of other things. So there's a lot over there that if you get out and you learn, you're going to actually meet people that are going to lead you to a new path of things that you hadn't heard about. If you're interested in sending me an email, I'm happy to refer you to anybody that would be helpful to you. Again, I don't have an incentive to do that except I want to help you pay less taxes or pay no taxes. So my email is bronson@bronsonequity.com. So going back to what we were talking about before on the last step is I put together this video that talks about cost segregation, particularly for real estate investing. So if you're interested in learning more about that, kind of the technicals of how that works, to how, especially in this investing bucket, you can reduce any sort of income on your investment, defer or forego any sort of taxes on that. Take a look at this video here and just let me know your thoughts there. So anyway, it is possible to find where you can, if you don't know how to do it, you find the right person, you can find a way to pay less or no taxes. So now we're going to go to this quote by John Maynard Keynes. It's a really interesting quote because John Maynard Keynes is a very influential guy. Don't always agree with everything he said. This one I actually do agree with. All right, so John Maynard Keynes, the avoidance of taxes is the only intellectual pursuit that carries any reward. Now, if you think about that, it's really true. By you pursuing this, it actually will allow you to actually gain the reward of paying less in taxes. So anyway, I hope you enjoyed this video. I'd love to know in the comments what you've done to reduce your taxes, maybe any resources that you have that could be helpful to other people watching this, because really if we help each other, this is how we get better. And it's amazing how the government puts these incentives out there, but a lot of times we just have to do the work to be able to find them, to be able to help other people. So if you made it this far, consider subscribing. Look forward to seeing you on the next video.